Going live. Okay, I am live. We are live. All right.
Yay.
So, what's going on?
Hello, Major. Welcome back to the state of Texas.
Listen, it's good to be home. Yeah, it's a lot of traveling, a lot of running around, talking to people and everything. So the benefit of going live is that people reach out to other realtors, reach out to you and ask you questions, reach out to me and ask questions, and then I take those questions and go ask people who know because lots of times I don't know. So we'll get into that in a minute. But before we get into that, let's talk about the market in Killeen. How are things going?
So things are picking up for sure. Not even just Killeen, also the Williamson County area. So
Mhm.
this past weekend, I did an open house. I've been doing open houses every other weekend, and things have been picking up. There's a lot of buyers on the market. There were 3 unrepresented buyers that walked into my open house in Killeen. Because they were renting, they are renting, and their lease is about to expire, about to end. So they're looking to purchase. So things are slowly picking up. The interest rates and the whole conversation that happened about a year ago when things were pretty high for the first time in a long time, a year and a half ago. Renters are now like, okay, well, things are not, necessarily going to change as fast as I thought. So people are waking up, and we're definitely seeing that. When it comes to, days on market, and overall time to close, we're talking about 50 days on market, meaning we go live today. On average, there's a 50-day waiting period. And then from that point is going to be another 28 days from contract to close, which in total is going to be about 78 days. Has slowly come down from last month. We're in the 100 90 to 100 days on market overall. So things are kind of going down a little bit. And then there's definitely more renters in the market. So and then also a lot of contingencies, right? People want to buy, they need to sell first, things like that. One thing I want to make sure that I'm bringing up to the table or putting on the table is there's some clients that are under, they're underwater a little bit, that they can't sell because of the hype. Obviously in 2020 things were so high up, and now that they want to sell, the market has leveled out. So they're potentially right on the mark to sell, with number wise, or they just can't because they're gonna have to come out of pocket. So I'm
Mhm.
seeing that. Honestly, I've been in 2 listing appointments, and that's the conversation that I'm having. So it's interesting what's happening, so yeah, stay tuned. Yes.
Yeah, so I think it's interesting because it becomes even more important to have those conversations early. Sometimes I know you see this, so where people are like, "Hey, I'm going to sell my house. Okay, we're going to sell in June. I need to have a listing appointment in May." No, you should have had that conversation early on, and do an analysis. Analysis of, hey, if somebody's looking to sell, I mean, what does the market actually look like? I mean, do I need to give up concessions? Do I need to help the buyer with the interest rate? So I think we're closing. I think we have 2 or 3 closing this month. I think.
Mhm.
Um, I think all of them are getting concessions of some sort or
Yes.
another. So it's really a good opportunity to have those conversations up front, in order to figure out what the seller needs to do and what the buyers actually need.
Yeah, it's honestly like I'm masterminding with other agents as well. We're all taking like tools out of our toolbox at this moment, being creative. If we have to up the price to give concessions, do we have to negotiate repairs? Do we have to wait before selling? Like, there's a lot of things that really are required in this market.
Yeah,
So it's an
yeah.
interesting time.
So quickly, I mean, let's talk about interest rates where we are. Not pretty. Okay. Well, let's talk about what has transpired since the last time we did a live. Okay,
Okay.
which was last month. We had consumer price index (CPI) come in, showing inflation higher than expected, and then we had producer price index (PPI) coming in higher than expected, showing inflation. And then we got some stuff going on with Israel and Iran. Okay, so that is having an effect on markets. Iran. You think Iran, you think oil. Okay, so the price is going up. My wife just told me she went to fill up the car and the gas was over $4. So those things are having an effect on inflationary pressures, and as those things have an effect, then interest rates go up because interest rates are technically a bond, and investors want a higher return on their money. A mortgage rate is simply a mortgage-backed security. So, if the investor requires more return on their investment, then those rates are going to go up. So the conversation in January was, so don't worry about the baby. Listen, so you cool. Don't worry, baby. We all got
For the audience, I have an 9 months today.
Nice.
Yeah.
And baby's fine. Baby Gray is fine. But back in January, we were having this conversation about the Fed's cutting rates 6 times. Okay, in 2020, yes. 2024. That's now down. Most economists are saying, hey, maybe 2, if any. So
that's a huge change.
It's just because now I will tell you the jobs reports come out and everything, and it's a whole bogus thing, in my opinion. Okay. All right. It's a bogus thing because the jobs reports come out saying, hey, we created this amount of jobs last month, but then the next month they will say again, we created this amount of jobs this month, but we're modifying the previous month down. Okay. And it's just freaking ridiculous. Market manipulation, and people don't know what they're talking about. And then the other part is that people are getting, people are creating jobs, but they're part-time jobs potentially. And, although there are jobs that are being created, they're not necessarily, these full-time jobs or all that stuff. We are starting to see some cracks in the labor market. So, all of that to say, rates are not coming down as fast as we thought. And I think you're starting to see things pick up because people are just coming to the realization that, hey, it is what it is. I need a house. Okay.
Exactly.
So I gotta deal with it.
Real life conversations.
Absolutely.
Mm-hmm.
Absolutely. All right. So I was in DC this week. So and it was cool. Lots of traveling, lots of so I was there as a part of a group called the Broker Action Coalition. It's a mortgage broker association. And we actually do some things we lobby Congress for certain changes in housing, certain changes in the home buying process and everything. There's a lot of things we have on the books or on the docket for veteran home ownership. It's going to be really, really good, and mostly just increasing awareness about the VA home loan benefit. Okay, so you may or may not know the actual statistics, but only 33% of veterans actually know. Only 30, and this is for you realtors out there. Okay, only 33% of veterans and active duty actually know that they have a VA home loan benefit and they can buy a house with 100% financing. Okay?
That's crazy.
So if you believe that the person you're talking to already knows about their VA home loan benefit, there is a 66% chance that you are wrong. Okay. So if the other thing is only 13% of veterans actually use their VA home loan benefit to buy a house. Okay. So, this is something that we're doing. We're trying to increase awareness around the VA home loan. How are people informed of this? And there's some proposals we made to the VA. And specifically, we were targeting, so what are called trigger leads. Okay. Now, what are trigger leads? Now, trigger leads are where your client applies for a mortgage. Now, if somebody applies with me, I have a link where they opt out of solicitation because I want a good home buyer experience. Okay. Mm-hmm. So my buyers, it is extremely rare that my buyers get trigger leads. Okay. So what happens is the credit bureaus sell your information when they see you pull your credit for a mortgage. The credit bureaus sell your information. It's a for-profit scheme to multiple other companies. Okay. And we call those leads or trigger leads that are triggered by your credit being pulled. Sometimes like people will call their loan officer, be like, you sold my information. You told this other person to call. Let me tell you something. Your loan officer is not creating competition for themselves. Okay. So, I mean, we know there's competition. We all compete for business, but they're not selling your information. It doesn't work that way. But the credit bureaus Equifax, TransUnion, and Experian are selling your information. So we had a lot of meetings and conversations with House of Representatives because the bill is on the House floor right now. Maybe it's going to be part of a data privacy bill. So we're trying to stop that. There is language in the bill for you to opt in if you want, 100 phone calls within 2 hours with people giving you offer for a mortgage, which actually does happen. You can do that. You can opt in. And the credit bureau's position right now is, hey, I think it is our belief that the client wants this, that the consumer wants this. So everybody is automatically opted in. Okay. We're trying to make it so that everybody is automatically opted out. And then you can opt into this trigger leads if you want to be. So that was our focus for this trip to DC. But more importantly, I had an opportunity to interview the guy who's the second in command at the VA. Now, the guy who runs the VA was not available, but I did get his deputy. And he came to us, and myself and another loan originator. Her name is Gay Veal. She's out of Colorado. Great person, great originator. Got a chance to have this interview, and we talked about multiple different topics, and I want to go quickly through them. Hey, baby Gray, how are you?
Hi.
I want to go through them and give you really the insight that they said from the VA. Okay, according to a certain some topics that are being discussed among realtors and around the industry right now. At the top of the conversation was the NAR settlement. Okay.
Yes.
If you don't know anything about this and you're just a buyer that's kind of watching this and you don't live in this space. There was a NAR settlement with the NAR is the National Association of Realtors. That was a class action lawsuit. NAR, the National Association of Realtors, decided to settle the class action lawsuit. And really, there's language that this is going to change compensation for realtors and stuff like that. But of course, particularly, this is important to the VA buyer because right now the veteran cannot pay the buyer's agent commissions when they're buying a house. Okay, that cannot happen. All right. So we had a conversation about this because if the veteran can't pay now, and this new NAR settlements basically said that the buyer is going to have to pay their own buyer's agent commission, or it's going to be more of a negotiation. Okay. So all of us are at this point where we're like, hey, what's going to happen for FHA and VA buyers? Are they going to have to pay the buyer's commission? Of course, if they do, then that increases the barrier to entry for veterans into home ownership because they have to have even more money to put, upfront as closing costs because they got to pay the buyer's agent commission. Because I will tell you that people like Soul work extremely hard. Okay. It is not as simple as walking up to a house and opening a door. Okay. That is not what happens.
Or negotiating a Tidewater or anything like that,
Stuff that we do behind the scenes that nobody ever knows about. I have a t-shirt that says, I'm a loan officer. I solve problems that you don't know you have before you know that they exist. But it's that we just work behind the scenes and get a lot of things done. So we had a conversation with the deputy at the VA, okay, about the NAR settlement, okay? And he did not say anything concretely. He just said that these are some things that he is thinking about and they're having conversations about. Now, I do tell you this. People believe that the statement that the veteran cannot pay the buyer's agent commissions or cannot pay the commissions, they believe that this is in the VA handbook. This is not just in the VA handbook. This is in U.S. legal code.
Wow.
Okay? So in order to change this, there's a lot of crap that has to be done, which is why I don't believe that this is going to be ratified in July, because there's a lot of things that have to be done and processed and changed in order to make this change. This is not, and the guy told me, Terry Roush is his name, the deputy. And he told me, it's like, look, if this was in the VA handbook, I would change it with the stroke of a pen. Okay. But it's not that simple. This is in US code. So one of the things is they're looking at is they do believe that the veteran should have an option, okay, to pay the agent's commissions. If the agent commissions, or if they're in a competitive area, okay, and they can say, hey, seller, you're not going to pay the agent commission. I'm going to pay the buyer's agent commission, and I have the funds to do so. They believe the veteran should have the option to do that, to give the veteran more power to negotiate. Okay.
Okay.
So,
that's fair.
That's fair. Okay. That should be the option. Okay. The other question when you go to that, though, is do you institute caps? Okay. For the max that you can pay on a buyer's agent commission? Do you institute caps? And do you institute caps according to certain areas, according to the competitiveness of that particular market? And then we talk about this. The competitiveness of markets change over time. So if you're putting something in a document, you really can't really shift, hey, this area is competitive now, this area is competitive. So, they're in this, and really this is an ongoing conversation about things the VA is thinking about. Okay.
That's very unique.
Absolutely. There will be guidance coming for this topic in the interim. Okay, an interim between now and July, when this is supposed to be ratified. He said there's guidance coming. I asked specifically, I said, Terry, you said that there is guidance coming. When should we expect this guidance? And he said, soon. So I was like, okay, that's all I'm getting. Soon as okay.
It's like when a woman is she's engaged. When are we getting married? Or when dating? When are we getting married? Soon. But not. Yeah, love it. Okay, that's a great answer.
So this was a really, really interesting conversation that we had with him, and it was just two originators, me and Gay Veal out of Colorado, and him having this conversation in front of brokers and everything. But he said that, like, hey, there is a shift that is coming. We want to make it so that the veteran has a choice, and there's still an opportunity to increase veteran home ownership. And this decision is not like, forcing, the rate at which veterans buy to decrease. So anything, I mean, so I know you're on with us. Any thoughts you have on that, Sol, or questions you have about, some things that we didn't ask, or it might be something that I didn't bring up. But, more information is coming soon. If you have questions about this, just comment, wherever you are about this NAR settlement and everything. It could be something that we discuss. What was cool was that after we stepped off of stage, there were three of us who are VA loan originators. We sat in the back and had some other conversations. Of course, those conversations were off the record, but there are some loop ways I can answer those questions. Okay. The other thing,
if you want to just clarify, like right now, the position that we're in, the VA buyer cannot opt in to pay anything.
Yes. Okay. So we're not, we're not making any changes. There have not been any changes as of today. Okay. So July, maybe something's coming. The other thing that we talked about was the VASP. Okay. This is the VA servicing purchase program. Now, what is this? Okay, now you're going to hear a lot of people say, well, veterans can get, an interest rate at 2.5% or something like that. That ain't true. That's a lie. Okay. So, but what the VASP does is it purchases servicing from lenders. Okay. This is, you've already closed on your home and you're making your monthly payment and you default. Now, background on this, there is currently a foreclosure moratorium on specifically on VA loans. So there's a foreclosure moratorium. I actually had a realtor reach out to me to ask me this question. She said, hey, I have a buyer. They say they're in foreclosure, but nothing's really happening right now. And the reason is their lender can't do anything to you because there is a foreclosure moratorium dating back to COVID. Okay. And that moratorium is set to expire on 31 May. Okay.
Oh, wow.
Now, when that moratorium expires, then you can, the lender is allowed to foreclose on you if you are behind. Okay. Now, the VA comes out with the VASP, because there is nothing to protect the veteran after May 31st. Okay.
Correct. Okay.
And the VA's number one goal is to protect the interests of the veteran. Okay. So the VASP comes out, and the VASP is going, what that's going to do is that's going to give the VA the opportunity to purchase the servicing rights from the lender and drop that interest rate to 2.5%, and hopefully give the veteran a opportunity to keep their home and to make the monthly payment. All right. So the theory that a veteran can buy at 2.5% through this direct program to the VA, that is a all-out lie. Okay. That is not true. What happens is the veteran has to go through a loan modification process, a foreclosure process, and then the servicer can reach out to the VA and say, hey, purchase this loan from us. And it's going to be held at the VA, not at the servicer. Okay. That is what the VASP actually does. Okay. Now,
so I have a question. So let's say that, for instance, myself, I have a property, I'm in this situation, and then the VA buys out my loan, right? Let's say I bought the property with a 6.5% or something like that. And they buy it from me, and I'm now paying, right? Those new terms are going to allow me to have a different interest rate at a 2.5 to kind of help me out with the mortgage payment.
Yes, absolutely. Okay. Yes. Now, I will tell you that the VA, the House Service Committee, I think it is, some committee over housing in Congress. Okay. All right. So, so they had some concerns about this, and they called the head of the VA into a congressional session and be like, hey, we got some questions about this, because we do not believe they're concerned about veterans just defaulting to get this 2.5% interest rate. And the VA pushed back like, hey, there is no evidence that a veteran is going to default just to get a 2.5% interest rate. Okay. So there's no evidence to support that theory. And they do not believe that is actually going to happen, because this is not an immediate thing. Loan modification. By the way, I just got a VA circular. Okay. So just this morning, by the way, for those of you that are doing VA loans, I say this all the time. There's a difference between somebody that plays basketball and a basketball player. So
I love that.
Two different things. That's okay. So if you ask a loan officer, can you do a VA loan? They're going to say yes. Okay. Absolutely. Because they don't want to turn away money. But there's a difference between, somebody that does VA loans and a VA lender. Okay. So, this is VA is what we live. There are those of us that live and breathe VA. Okay. So we know what's going on. We know the guidelines and everything. So just be careful when you send something. If you're a realtor, you send something to a lender, or if you call up somebody, if you're a buyer, you call up a company that might have, United in the name, and you say, hey, can you do a VA loan or whatever? That's different. All right. So I just got a VA circular. Part of that modification for the servicer is going to be modifying the loan length to 40 years. The VA is authorizing that. Wow. If you are in default, you can modify the loan length to 40 years and give the veteran an opportunity to pay or make the monthly payment lower if the veteran is in trouble. Okay. So there are all of these things that go on before you get to the VA, purchasing that loan and giving that person a 2.5%, seeing if the veteran can hold on to their home. All right. So that's number two. The other thing I asked, and I'm like, wait a minute. Okay. If you got a 2.5% interest rate now, that's very attractive for an assumption. Okay. So can you assume that loan, at that 2.5% interest rate if it's been purchased by the VA? Okay. And the deputy said, hey, VA loans that are VA guaranteed loans. Okay, let's talk about the VA guarantee. When you take out a mortgage, and then you, that when you close on your home, that loan is then guaranteed by the VA. Okay, so the lender, you can go through any lender to get your loan, and then it's guaranteed by the VA. All right. So although you're paying your monthly payment to, United Wholesale Mortgage, or you're paying that monthly payment to whoever the servicer of that loan is, it is being guaranteed by the VA, although you're making your monthly payment to insert mortgage company here. All right.
Got it.
If it's purchased by the VA, then it's no longer a VA guaranteed mortgage. It is a VA owned mortgage. Okay. So there's no language to allow somebody to assume a VA owned mortgage. Okay. Now, he did say the purpose of the VA assumption it's a stop loss measure for the selling veteran. Okay. One note on VA assumptions. We had an interesting conversation about VA assumptions. He said that the average amount of VA assumptions typically is about 200 to 300 per year on an average year. Okay. In the most recent year, the average amount of VA assumptions was about 3,500 per year. So we go from 200 to 300 per year to 3,500 VA assumptions. Now, I will also say that 3,500 VA assumptions relative to the amount of VA loans that are actually done is not a lot. Okay. Texas alone had almost 400,000 VA loans last year. So, this is not a lot of VA loans, especially for the amount of times I see it advertised. It's not something that's prevalent. And I did ask, like, hey, there's a lot of VA assumptions going on right now. He said, look, is there a desire for the VA to decrease those numbers back to normal? And he said, absolutely not. It's a stop loss measure for the selling veteran. We don't care that the buying veteran or the buyer is getting a 2.5% interest rate. We don't even care that a non-veteran assumes that loan. Okay, that's up to the veteran and how they decide how they want to use their entitlement. But he did say, it's for the focus is on the selling veteran to get them out of a bad situation, so they don't lose money. So he said, hey, there's no desire to decrease the amount of VA assumptions right now, although they have blown up, relatively speaking, over the past year or so. So
I do have a question. So for the VAS, right? Let's say that that seller does all that. Is there anything that we as agents have to understand or consider when, let's say, they want to sell, right? Like, is there any, money owed or anything like that you know?
Right. So the short answer to your question is no, because you don't care. When you're selling a house, you don't care who owns the mortgage. It's being paid off. So the only thing that's going to happen is the VA is going to purchase the servicing rights from that servicer, from that bank. And then, the veteran is going to end up paying the VA directly their monthly payment. And so they're dropping the rate so that they can get the monthly payment lower. But it's going to be, if you're a realtor, it's really no concern for you outside of your desire to help another veteran, or help a veteran through this situation and advise them through this situation. By the way, even on the VAS side, you can't do anything to expedite this process. This is totally up to the servicer of the loan. Okay. So the notification of the program was basically put out so people are aware of this, but you don't have any control over this. The servicer of the loan is the one who has to request that the VA takes this over.
Okay. Because I was going to say, what does a seller have to do? But at this point, there's nothing to do. The bank has to be the one to initiate everything. And then I'm assuming they will guide them at that point. Hey, this is what you have to do. This is who you have to pay.
Yeah.
Right. Okay.
Yeah. So at that 2.5%, the question of, hey, is this an advisable, is this an assumable loan? Sorry. Is this an assumable loan at this 2.5%? He said, look, the intent is still to protect the veteran. Okay. Now, those situations, once the VA has the loan through the VAS, it will be very much on a case-by-case situation, and that request will have to directly be made to the VA. Okay, and I know we're at 30 minutes, but this is good stuff. And
no, this is great stuff. Yeah.
So when we get to the question of, hey, can this be assumed at 2.5%? He said this is very much on a case-by-case basis. It depends on the situation of the selling veteran. Okay, keep in mind, assumptions were, and he explained this a lot. He said assumptions were made to be like a stop loss measure for the veteran. It was never meant to be a product like it's being used right now. Okay. So, he did say, it's one of these things that, it's going to be viewed case by case, and it won't It's not unnecessary. Hey, you can assume this loan is at 2.5%. So if you're a realtor and a loan is owned by the VASP at 2.5%, I would not openly market that, because that's going to be, could be kind of false or misleading, because it's not a VA backed mortgage anymore. It's not a VA guaranteed mortgage anymore. It is a VA owned mortgage.
So let me ask you this. You may or may not know, but let's say a client is in that position. Me as a listing agent, who do I have to contact? Is it the VA, like call a 1-800 number to say, hey, is this assumable? If so, what are the steps?
Yeah, so it's important to know, as a veteran or as a realtor, there's a hotline for the VA. Okay, realtors call me all the time and like, hey, my lender that I'm working with said the appraisal was ordered, but it's been 3 weeks and all of this stuff. You can call the VA, give them the veteran's last name, and find out, hey, when was the appraisal ordered? Why is the appraisal? So all of these things, the veteran themselves. Now, I will tell you, if you're calling the VA, you get the most amount of response if you are the veteran yourself. Okay. So if you're the veteran selling or buying, call the VA hotline. Okay. I'll post it in the comments or something like that. If you are a realtor, you can call the VA hotline, but you're going to get the most results if the veteran calls themselves. Okay. So yes, if I have a loan that's with the VASP, now keep in mind, the VASP does not kick off, okay, until May 31st, after the moratorium expires. Okay. That's when they're going to start purchasing their first set of mortgages and owning those mortgages directly by the VA.
Wow. Groundbreaking information. I have a question, but I don't know if you're going to hit it or not.
No. I'm wrapping up here. So I'm trying to make sure that I cover everything. And there are some thoughts that popped into my mind while I was talking. And by the way, if you're a realtor and you have a question I didn't cover, or a buyer, you got a question I didn't cover, please post them in the comments. And we'll try to find out, the answer to them. So go ahead with your question. So
you mentioned, we talked about this in the past too, about refinancing, like pulling your equity. And in Texas, you cannot unless you go into a conventional loan. Was there any information you gained this week from that?
So I am working with, there's a guy named Wade Betts. He's from Empire Mortgage, great guy, great originator, great loan officer. I love him. Wade Betts, he's as a part of the Broker Action Coalition, we all have state captains. So I am a board member on the Broker Action Coalition. There's 8 board members, I think it is. Yeah, 8. I'm one of the board members, but we also have state captains. So if you're a realtor in another state, and you want to know, hey, who's my Broker Action Coalition state captain? You post a comment, I'll let you know who the state captain is. We have had this conversation with Wade multiple times. And so, and keep in mind, like, there are some things that we have taken care of at the legislative level and people didn't even know about it. For example, if you are 100% disabled, okay, if you have a 100% disabled vet in the state of Texas, you can basically waive escrows and not count that monthly payment, depending on your lender, it's a lender overlay. But the state allows you to not count that in the monthly payment, okay, up front. So that means that veteran qualifies for more if you're using the right lender. The lender might say, no, we're going to count it in. But if you're 100% veteran and I'm doing your loan, you can qualify for more because you're not counting the property taxes, which Texas could be $300, could be $1,500.
That's so important. Can you make sure you repeat that, because I don't just make sure people caught what you just said.
Yeah, so you can offset, you can not count the taxes when you're doing the pre-approval, so that veteran can qualify for more, okay? Because the DTI is not going to be affected, the residual income is not going to be affected on the pre-approval. So you can actually qualify that veteran for more. And they get a larger house, nicer house, or whatever, because they're 100% disabled. That is that was something that was done at the legislative issue or legislative level. There are 10 states right now that allow us to do that. Okay, only 10. Now, what we're trying to do is get like 5 more states. And then we can go to Congress and say, look, this is pretty much at critical mass. You got 15 states that allow this, 35 states don't allow this. You need to pass this law to make it so that every state allows this. The other thing we're doing is we are working on, where the right now, let's say somebody's getting off of active duty, and you've already done your last exam, okay, and you're gonna be at 100%, okay, but you haven't gotten off of active duty yet, okay. Right now, we have to hit you for the VA funding fee, and then you get that back, okay. What we're trying to do is, if you've done your final exam, we know you have that letter that says you're going to be 100% or whatever. We're trying to make it so you don't pay the funding fee across all levels, so you're not waiting on a refund or something like that. So
can you disclose how much that is on
yeah, I mean, if let's say you're buying you got a subsequent use going on, and you're buying a home at $500,000 because you're forever home, you're retiring or whatever, that's like $17,000 just being added onto your loan on the VA funding fee. Now, once you close that loan, you get the VA funding fee back or whatever. But why do I have to give it away in order to get it back? Okay. Right. VA, why are you doing it? So we're trying to make changes like that. To answer your question, me and Wade have had extensive conversations about, lobbying, and it's a state issue. Who do we talk to? How do we have the conversations to change the VA cash out rules? Okay. Now, this is probably a 2 to 3 year uphill battle. Okay. Because you're talking about changing the state constitution of Texas. Okay. Yes, so, but I mean, I ain't got nothing else to do, whatever.
2.5 years later.
Yeah. So what we're doing is we want to change it. If I'm doing this in Hawaii, I could do a VA cash out up to 100%. Or if I'm doing it in another state, I could do a VA cash out refi up to 100%. The veteran, it's their money. They can take the money out. However, where we're trying to get to in Texas is just give the veteran the same opportunity that you give the conventional loan buyer. Okay. Give them the same opportunity. If I can go up to 80% on a conventional loan, why can I not go up to 80% on a VA loan? Okay. We're not saying Texas is typically conservative. But we're not saying, hey, take all the equity out of the home. We're saying, can we get up to 80%? Can we give the FHA buyer, okay, or the VA buyer the same opportunity? Now, that's a challenge. We got to work on that. It's going to be a lot.
Yes.
But that is where we want to get to. And there are some other things we're doing at the VA level, some things we're doing at the state legislative level. And there are some great people doing some great things in states. There's and this is done like really this activism stuff or activist stuff and advocacy, what we call advocacy stuff, is done really at the grassroots level. It's like the legislator that's right down the street. And they also are, have a connection to the House of Representatives member and all of this stuff. So, I mean, and when we were in DC, we would talk to people like, oh yeah, I know this person that lives here. And there were many times like, oh yeah, I know that person too. So, this is not, people in DC are just your neighbor that happens to be elected, or happens to work as a staffer on this person's, campaign or whatever. So it was a good trip, but there's a lot of stuff that's in the works. It's a lot of work, and a lot of conversations. So it's a pretty good trip, but I wanted everybody to know what's going on with the VA, in light of recent events. And if I didn't cover something and somebody has a question like, hey, are we dealing with this? Maybe. There's also something, and I'll give a shout out to another guy who's at Edge Home Finance. His name's Sam. It's something that's down the road. We're not there yet. Okay. But there is something called the Helper Act. Okay. Helper Act. You can Google it. There's a website for it. Now, what this is going to do is this is going to give a VA-like loan, okay, to teachers and first responders. Okay. So this is going to be a FHA loan with no PMI, but significantly lower PMI that will allow that teacher first responder to finance a home at 100%. Now, I do have loan programs where you can finance at 100%. I just closed one last week. I think the family ended up paying like $2,000 out of pocket, $450,000 home, because they finance on FHA at 100%. They did a down payment assistance loan. The down payment assistance loan was a grant that was immediately forgiven the day after closing. So slightly higher interest rate, but they didn't pay any money out of pocket or paid $2,000 out of pocket. There's a realtor here in Dallas named LaWanda. Great job negotiating. Got seller concessions to cover the closing costs. They got the grant to cover the down payment. So FHA, they got it 100% financing. So, but that's a down payment assistance program. What the Helper Act is trying to do is give do this from a government level. Okay.
That's
yeah. So that's probably a year or two down the road. Okay. I know Sam probably doesn't want to hear that. But he's put a lot of effort into it, and shout out to him. But there's a lot of things that's trying to be done at the legislative level to make home ownership more affordable. At this thing, we had a veteran roundtable for VA loans, and we had a black ownership roundtable talking about how we make better homes more accessible to black people. Right now, the rate of ownership for black owners for black people is about 43%. The national average is about 65%. Non-black ownership is at 75%. Now, people are like, hey, what about other people and everything? Okay, listen. If I increase home ownership for black homeowners and Hispanic homeowners, I increase home ownership for everybody. If I raise that level, okay, a rising tide raises all ships. So it's not like we're being disparate against against another group of people. It's just that we understand if I raise home ownership for frankly, groups of people who have been historically discriminated against, if I raise that for those group of people, then I raise home ownership for everybody. Okay. I did a down payment assistance loan last month for a black family. Okay. That family was black. The month before, same program for a white family. So, it's not like these programs can become available because they want to help minorities, but it doesn't necessarily exclude, okay, other people who want to use the program. Mm-hmm. So, but yeah, it's a lot going on. We're doing a lot of work on the political side. And I'm glad we had this conversation. You get to hear, what we do on the political side to try to change things too for homeownership, not just, hey, what's your DTI? I need to get pre-approved.
Right.
There's a lot of stuff that goes into that.
Yeah, I love that you answer that question so well, because right now, one of the ways I'm giving back to our past clients is doing an annual review, as you saw with one of our clients. So I'm discussing like, hey, this is your potential, obviously I'm not an appraiser, equity position, and this is what you can do. If you're not planning to sell, that's fine, but you can refinance. However, at this moment, we have to refinance to a conventional loan. And a lot of people don't know that. So it's good to start the conversation and then also give them like, hey, however, people like Major that and work with are working actively to change this. It's not going to be tomorrow, but it should be hopefully in the works in the next couple of years. So that would really change the game, honestly, for us veterans or as us active duty members to use our VA home loan, to purchase and then really build equity here, and really, have properties that just going to provide us financial freedom in the future. So that's honestly groundbreaking. I appreciate you, all your hard work. We're rooting for you, Major. We out there with you. Man, you're doing amazing. I'm so proud.
Well, thanks to you. So thanks to all of our clients. I mean, we've helped some amazing people buy homes. Yes. Some great people. And really what's amazing when we help people is like there are people who are actually frankly, I got some clients that are just entitled and whatever. So, people are people. I mean, just people. Right. People are peopling. But many of our clients are just so grateful for the opportunity to help them get into a home and everything. And it's pretty amazing. The work that we've done. I think we've been together 3 years.
Yes.
We've seen each other grow up.
I know. You told me by honestly 2 properties, and I'm working on saving for the next one. So you're like our godfather. When me and my husband talk about like financially, okay, what are we gonna do with the house? He always says, "Did you ask Major yet? What's his 2 thoughts?" Like all the time. So honestly, like, yeah.
Well, I'm honored by that. You and Juan are great people, and it's been fun. We're having a lot of fun helping a lot of families get into homes. But it was a good conversation, man. It's good to go to DC and have conversations like this so people understand. And I will tell you, like, people in DC don't know what goes on at this level. Even when we were in DC, there were some people who were CEOs of lending companies, and they thought like, hey, we got this great program. Have you heard about it? Yeah, I heard about it. Let me tell you why it's crap. Okay, because it's just, and they don't know because they don't originate at the family. They're not talking with families. They're not telling you like, oh, this is where this program misses it. And we're able to have those conversations and everything to tell them like, hey, this is what's going on and why more people aren't using your program. So it's good. We're at 45 minutes. So
I know it just flows when it's so good information, and it's applicable to real life and families, like you mentioned.
Absolutely. So if we said something that was not clear, shoot us a message, shoot us a text, comment on this. If we answer something that's not clear, please reach out to us. More than Soul being your realtor, more than Major being your lender, we want you to have the right information. Okay. Right. And actually be able to serve our communities better. So, baby Gray.
All righty. Sign us off, baby. Sign us off. Say adios.
Talk to you soon.
Likewise. See ya.
Bye-bye.
Yeah.